we suck at trading. And you know why? Because you're an ape. I'm an ape. Not in evolutionary sense, but we're apes in how we trade. We are monkeys with a mouse, essentially, which is fine. But we're essentially trading completely off emotions. We're trading with zero plans. Plans, not plants. You can trade with a plant if you want. We're trading purely off of our chart, which your chart is literally just showing you what has happened. It's not showing you what's going to happen. We're not thinking in probabilities. And we're going ape. We're going to ape because we're all greedy and we're all pigs and all we want to do is make a ton of money. Okay. So, knowing all of that, I want you to take the opposite. I want you to fade that mindset, okay? Buy some puts on that mindset, short the crap out of it, because you need to go to the opposite end of the spectrum. You know, there's ape, and then there's thinking like a professional trader. And what is a professional trader doing? A professional trader is thinking in probabilities. He's thinking, do you ever have that inner voice where you go, this is probably going to happen? You know, you're looking at the market, you're watching your watch list, you're hearing some news, you're saying, oh, this is probably going to happen. What's going to happen? I don't know. Amazon's probably going to rip 50 points off of that. Okay. That's probably your trade right there. That probably, that voice inside your brain that's saying, this is probably going to happen, is probably your best trade. And so listen to that inner voice that says, you know, this is probably going to happen, because you can take that idea and now you can start building a trade around it. For example, I'm going to go over an example of this probably going to happen thing. What's probably going to happen off CPI data, if the market likes the number, is tech is going to rip. That's probably what's going to happen. Okay, if they don't like the inflation number, tech is probably going to dip. That's probably going to happen. So these are my two scenarios here, my two probablys. Okay, so if I know this, we've been consolidating, we've been super low volume, we've been sideways, the markets look like they want to go down, which is always a recipe for higher in general, because everybody gets all hedged and all buy all the puts in the world. They start selling everything. There's no volume anywhere. They think the volume spike's going to be to the downside. Okay, what's probably going to happen is we're going to gap up and rip higher, in my opinion. And that's what my brain is telling me. But I could be wrong. And how will I know I'm wrong? If the market crashes or if the market goes down. Okay, so if the market goes down off CPI data, whatever it is, then I know the market doesn't like it. And if I see volume to the downside, I'm probably going down. And so what I do, okay, so with all these ideas in my head, these probablys, I went and bought QQQ puts. That's where my logic led me. I don't know if my logic is correct, but my logic led me to buy puts on QQQ. And the reasoning was simple. I want to be hedged, just like everybody else, in case the market wants to dive off the number, in case inflation comes in and it's unexpected. Okay, it's cheap to hedge, and it's cheap to hedge my long positions. I don't have too many long positions. Okay, so that was my first trade. My second one was, what if every bear out there gets absolutely massacred tomorrow? Which stock has the best setup right now within tech to just go absolutely insane? Is it Amazon? Probably not. And this is kind of my thinking here. Probably not Amazon, probably not Netflix, probably not Apple. So we're going to play this process of elimination. Probably not, what else we got on big tech anyways? Probably not Twitter. And probably, it's probably Facebook. Like, if I'm just playing the game here, it's probably Facebook, it's probably Shop, it's probably Google, maybe Roku. You know, I'm just kind of looking at these here and playing the probably game. And I'm thinking, okay, and it's probably NVIDIA, it's probably LRCX, And I'm really liking this setup here on LRCX, by the way. So we'll be watching this. I didn't take a trade at the close on this one, or Nvidia, but I did take a trade on Google. And the reasoning was that Google will probably make new all-time highs sooner rather than later, before it craters and gives us another dip. It'll probably go higher if the market likes the CPI data, or if the market just goes up. The market might not even like CPI data tomorrow, and it might still rip. And so that's the kind of market we're in right now, where it's like bad news is good news, and good news is good news as well. So, whatever. You just need to be long in those kind of markets, especially with all these rippers everywhere. And so I definitely wanted to be long one of the most bullish stocks within that sector. That's tech, and then FANG, and something that had a good setup too. I mean, you had 2 days worth of consolidation. So if you were going to buy any premium, if you're going to be buying premium here, you want to be buying premium when they're cheap, not when they're expensive. If you're buying them here, you're getting whacked, because the next 2 days they're just killing your premiums with theta. So understanding that too is important. So we got hedged on Qs if we break lower, and then we got calls on one of the most bullish stocks after a 2-day setup. So this was the probability game that I play going into tomorrow. Now, will it play out that way? Here's the next thing. I don't care. Okay, you got to get that mindset too. You can't care about the result. I do care about the result, but you can't care. You know what I mean? Like, you just got to be able to take the trade and have no feelings for it. Whether you make money, great. If you lose money, who cares? Okay, next trade. And you just move on like a freaking robot. Every trade, you just move on. Okay, I lost on that trade. Move on. What's the next setup? What's the next trade? What's the next idea? Okay, take that trade. Lost. Move on. What's the next setup? What's the next one? How can I get better? What can I do? And you just keep doing that. Progression every day. Do 20 trades. Go back and look at them. What did I do wrong? How can I fix it? Is there a better setup I can take? What did I miss? Should I cut those profits earlier? Should I leave them longer? So what I'm learning that nowadays is you should be cutting profits sooner, because market's pretty choppy. So nobody's really letting these things run for multiple days in most cases, especially after AMC and GME have already run. So you should be taking profits on any spikes. That's just what everybody's doing. Maybe it comes back where things start breaking out and going on multi-day runners. Then you leave your profits in there and you let them build. So hopefully this helps you guys get out of the APE mindset. Definitely, if you like this video, hopefully you leave a like or something. Don't really care. Bye.